Remember Opendoor? They were the company that promised to use slick algorithms and big data to completely revolutionize how we buy and sell our homes. They were going to be the big tech disruptor, right? The future of real estate. But then, in what felt like the blink of an eye, that whole vision just came crashing down. So how does a tech giant, armed with some of the most powerful algorithms out there, face a near total collapse? Well, the story starts with a single decision that changed absolutely everything.
It all comes back to the year 2022. There was one powerful decision that sent this massive shockwave through the entire economy. And in doing so, it exposed a fatal flaw that was hidden deep inside Opendoor's high-tech business model. So, what exactly was this catalyst? Well, it all kicked off when an attempt to fix one major problem accidentally created an even bigger one for the housing market. Okay, so inflation was getting out of control, right? To fight it, the U.S. Federal Reserve started aggressively hiking interest rates. And while the goal was to cool down the whole economy, the place that hit the hardest was the housing market. All of a sudden, mortgage rates, which had been at these historic lows, just shot through the roof. It became dramatically more expensive to buy a home. This created what economists call the lock-in effect. And it makes perfect sense when you think about it. If you have a mortgage at, say, 3%, why on earth would you sell your home just to buy a new one and get a mortgage at 7%? You wouldn't. You're locked in. Millions of homeowners who had bought or refinanced during the pandemic suddenly had a golden reason to just stay put.
And just like that, the supply of homes for sale just vanished. It dried up almost overnight. The entire market for existing homes just froze solid. And if your entire business is based on buying and selling those exact houses, well, that's the beginning of a catastrophe.
You see, that deep freeze didn't just slow Opendoor down. It struck right at the heart of the company's core strategy, turning its greatest strength into its most devastating weakness. This really gets to the double-edged sword at the center of Opendoor's model. In a hot, rising market, owning thousands of homes was a brilliant move, right? Every single one was an appreciating asset ready for a quick profit. But the second the market turned, that same massive inventory became a giant anchor holding thousands of homes that were losing value by the day. And this is where the tech itself failed. Opendoor's prized algorithm was supposed to be this dynamic tool that adjusted to market changes in real time, but it couldn't keep up. According to internal claims, it was still valuing homes like the market was red hot, causing the company to overpay for houses right as their values were about to plummet. The tech couldn't save the tech company.
So you've got this combination of a frozen market and a faulty algorithm. That led to a financial outcome that was frankly nothing short of an implosion.
So let's actually put some numbers on this. How quickly did this model unravel, and what was the real scale of the financial damage?
The speed of the collapse is honestly breathtaking. In the second quarter of 2022, Opendoor posted a loss of $57 million. Okay, not great, but, manageable for a company that size. But just 1 quarter later, that loss exploded to an almost unbelievable $928 million. The financial bleeding was immediate and just catastrophic.
And get this, over $500 million of that loss came from one single line item, an inventory write-down. That's really just a corporate way of saying they had to officially admit the houses they owned were worth $573 million less than what they'd claimed. It was a stark, brutal admission of just how badly they had overpaid. A financial disaster of this magnitude doesn't just stay on a balance sheet. It has very real and very human consequences. And the fallout was swift. Right after that catastrophic loss was reported, the company's co-founder and CEO, Eric Wu, stepped down. And in the months that followed, major restructuring led to over 1,100 employees losing their jobs. The impact on investors was just as grim. In the course of that 1 year, 2022, Opendoor's stock price completely collapsed by a staggering 84%, wiping out billions and billions in shareholder value. To put that into perspective for you, a company that had gone public with a valuation of nearly $5 billion suddenly found itself worth just over $1 billion. It was a stunning fall from grace for one of the darlings of the tech world. The story of Opendoor shows they had all the data, they had a powerful algorithm, but none of it could protect them from a fundamental, seismic shift in the market. And it leaves us with a really critical question. In a market driven as much by human emotion as it is by numbers, can an algorithm ever be smart enough to see the breaking point before it's already too late?